Yo, yo, yo. We live? I think we're live. I think we're live. Hello, are we alive? Maybe, maybe not. I don't even know. Portfolios are dead. That's for sure. Just trying to make sure we're actually live here. Are we live? Going once, going twice. Hello. Hello. Audio good? Audio good? Bro, I'm holding the back so hard. Me too, dude. So bad. So bad. So we're live. Okay. It's been a while since I went live, so wanted to make sure all the settings were good, but we're getting smoked. We're gonna get into everything. What the fuck is happening right now? It's bad. Fundamentally, perhaps it's not bad at this point, but yeah, dude, Resolve, Poet, UiPath, ServiceNow, Rubric, all of them. Just can we all just take a, deep breath? Death spiral coming. Maybe. I mean, there's like that. There's a scenario for all of that. South Korea's Kospi plunges 5%, so that's great. But there is a scenario where this goes from like sentiment to fundamentals. That's the shift that I'm waiting for is does this go from sentiment and panic and emotion to fundamentals? And you could argue that stocks selling off this aggressive, like it's not even about the level when it comes to like economic activity. Like 2022, we were in a rolling recession, stocks kind of fell a bit, they would rally a bit, they would fall a bit. This is straight down liquidity. This is a liquidity issue, not a fundamental issue. So yeah, to that extent, you could definitely hurt the economy. What I'm more concerned with is what's happening with OpenAI. Oracle is a really good example of likely what OpenAI stock would look like if they were publicly traded right now. Look at that bounce on Bitcoin, though. Plunge protection team, maybe. Disgusting, dude. $60,279 was the low here. Good evening, everybody. Let's go. Yeah, I figured I would go live just to answer any questions. We could talk stocks, we can look at balance sheets, we could get real weird if you guys want to. But dude, all day I've been just laughing about this. You have to laugh about this and put your head under the water and buy. Like, that's not financial advice. Obviously, none of this is. Come to your own conclusions. But these are the moments, like DeepSeek, right? It makes everyone question everything. This is one of those moments, okay? Every time in my experience that you've had one of those moments, it has been a good buying opportunity. Let's cry together. Yeah. I probably could muster up a couple tears. This shit is funny. I don't even know where I was going with that, but yeah, again, I'm watching to see when sentiment turns into actual issues. Like, the big thing that I started noticing yesterday too, with Google earnings, but today and after hours, it is becoming clear with capex, right? There is no winning here. And I think this is, let's get shit-faced drunk. I am going to drink like a beer or two. Watch this. This is my first beer. Promise I'm not drunk. I'm just a little delusional on what the fuck is going on right now. But like capex, okay? if Wall Street is going to bully Google and Amazon, quote unquote, for their capex, you're going to see them cut back on capex. And then you're really going to have this quote unquote bubble popping. Just like Meta in 2022. I had a killer trade in Meta. My best trade by far ever. It was $500 into 25,000 on the first Meta earnings. That was like the black swan, right? Beyond the point. But in 2022, Wall Street did not like Meta spending on the metaverse. It was not the economy to be spending $10 billion a quarter, so on and so forth, just in YOLO projects. That's how Wall Street's seen it. And it looked like it turned out to be a YOLO project after all. But Wall Street will listen. These companies will listen. If Wall Street doesn't want them to invest, they won't. Okay, they will cut back. Now, maybe you could say that's good for a period, but again, that means like the AI quote unquote bubble popped, right? Cut back on AI spending, that's bad. You spend more, that's bad. You're kind of in a lose-lose scenario. From a economy standpoint, 85% of company earnings come from the economy. That is why Wall Street cares about the economy. Like Meta and all these other companies, their earnings will take a hit if the economy like does bad, okay? Even then, like GDP, most of it is related to AI. Now, we'll see. I don't know if we're at the stage right now where companies actually listen to Wall Street and start to cut back on capex, but that is something I'm going to be watching closely. Good news is this is a year where I think you can invest in the quote unquote boring stocks and do well, you know, like Elf. Elf, you know, pretty boring company. They sell makeup. They had blowout earnings, okay? Blowout earnings. Analysts weren't even close, okay? Look at Elf. This was last night. Elf, like freaking makeup company. Blowout earnings, stocks up 16% in after hours last night, gives it all back, rallies like 5 to 7% to start the trading day, sells off in pre-market, bottoms out, rallies at the start of the trading day, was up like 7% again, 8%, sells off, down 9.2% today. Okay, so that's an issue. Private credit in general is an issue because private credit has been in a really bad place, and they specifically like target the software, the riskier, you know, areas of this economy, and like the middle of this economy. Think like regional banks. They service a lot of working people, right? A lot of big banks will do big deals, invest with big companies that are not as risky. And then a lot of private capital in recent years has really helped out the struggling companies, the companies where maybe they're not doing as good, where banks can't touch them or do too much business with them. That's where private capital has been helping out. It's not like venture capital like a lot of people think. So the real bear case scenario with this is, one, AI capex gets cut, that Wall Street bullies companies into cutting AI capex, and that's not great. We'll see. Hopefully that does not happen. And then the other bear case to this is if private capital, private credit dries up, then you're going to have a good chunk of this economy that can no longer get the kind of funding they need. And it's not exactly a great economy in middle America right now. Like without AI, without the data centers, without the AI trade in general, this economy would look a lot different on paper. So you said DCA or time the market. You could probably do a little bit of both, right? You could start buying now. Like this is historical. Okay, so nobody knows anything when it comes down to this. I actually just heard Dan Ives today say that he's never seen anything like this, like a sector of the market go to shit so fast. We've never seen anything like this. And I was around in the, crash of 2018 where Christmas Eve, the markets bottomed. You were down 20%. That was a very aggressive crash, and there was a lot of people nervous at that time. This feels much worse. Okay, it looks much worse. It is much worse for like software, tech. These valuations have never been this low for tech going back to 2014. Like, this is not a fundamental driven sell-off. This has nothing to do with AI at this point, right? Let's acknowledge this, okay? The sell-off in tech and AI and software has nothing to do with fundamentals or with AI disruption risk. Maybe the first day. This is not that. This is a liquidity crisis. Okay, let's call it what it is. This is a crisis in liquidity. Somebody is going bankrupt. Okay, somebody is going belly up right now. Okay. Who? I don't know. Is it OpenAI? Probably. I don't think you can have your business get wrote down that much, that fast because of a competitor. And at the same time, you're looking for funding. At the same time, global liquidity is really drying up and not be under some severe financial distress. Again, I was going to pull up Oracle. I think I got sidetracked. I'm pretty good at that. Oracle. I mean, this is probably to the T what OpenAI stock would look like if it was publicly trading right now. Probably worse. Okay. Like, the only out that private credit had investing in OpenAI and giving them money was an IPO. Good freaking luck IPOing OpenAI. It's just not going to happen. You're not going to be able to IPO that thing. And it's probably like, what would I pay for OpenAI? Not much. Me personally, with the kind of losses they're going to have, never is going to be profitable. Would I pay $50 billion for that? That's probably expensive to me. Okay. But it's easy to do so in private credit when everyone loves OpenAI. They can do no wrong. You can bid up the valuation all you want because they're going to go public one day and you're going to get all your money. It's not looking like that anymore. Okay. And I don't think big tech is going to want to finance OpenAI. It's like, again, I said this in the video earlier today. It's like the second you drive a car off the dealership, you take like 20% right off the top. Well, yeah, it's like you're going to take 60 to 80% right off the top as soon as you make that investment. If you're Meta or Microsoft or Amazon. Or I am curious if Amazon commented on the OpenAI deal, if they're still looking to do that. I haven't had a chance to look at the transcript of the earnings call. But yeah, I don't see any of that happening. So yeah, that's rough. Imagine a SPY dropping 20% after all of this. I'm going to have a nightmare about that. Guys, like, you know, I'm a long-term investor, so deep down, I like getting these kind of deals when it is just sentiment, right? At this point, it's just sentiment, but there is a rising risk that, again, companies get bullied into lowering their capex. I don't think that has anything to do with what's going on. I don't think Amazon is down, 400 billion, 300 billion in market cap right now in after hours, down 11% because of their AI capex. That's a lie. That's not true. That's the easy answer for Wall Street to kind of hang their hat on, but that is absolutely not what is going on. Okay? Like, this is liquidity, margin calls, all of that. It's bad when Nancy Pelosi is down in her positions. Yeah, that's rough. You seen they had an advertisement in like Times Square that said, "Thank you, Nancy Pelosi for your stock trades." That was hilarious. Glad I kept my Canadian bank stocks. Yeah, I mean, if you have to be anywhere, I guess like banks, I guess. But then again, does this turn into a economy issue? If it turns into an economy issue, goes beyond just panic in the markets, which is a slippery slope right now. Somebody is going BK. I think it's OpenAI. They can't get the funding. I think you're just seeing that priced into markets all at once. That's my opinion. Could I be wrong on that? Could we come out and see news tomorrow that OpenAI has secured XYZ in funding? Yeah, like that's possible. I would be surprised. Really, really surprised. I don't know who in the right mind would underwrite that deal. It makes no sense. SoFi is a screaming buy here without question. I think most stocks are. You know, again, Rubrik, that's one of my favorite buys right now. If you guys haven't looked into this company, I mean, not financial advice, not a financial advisor, thing could come down more, but you're down just crazy amounts on this company. They IPO'd back in April of 2024. They just put up 48% year-over-year growth in the last quarter. Guess what they said? They said last night that they beat on all metrics for Q4. Every one of them. EPS, margins, revenue, all of it. Stock got a little bit of a bid in overnight trading. It was up about 5%. Stock today, down 7. Down another 2.5 after hours. Okay? Like, nothing is being rewarded or will be rewarded during a liquidity event. Okay? What do you guys think? Do you guys think that whoever's going bankrupt right now, whoever's under severe financial stress, do you think this is going to leak into the real economy? I mean, the numbers out today, the JOLTS jobs openings was really, really bad. I can't recall seeing a number where you missed by like 700,000 job openings. I can't recall that besides COVID. So do you guys think this could end up being like a actual economy event? Because if that's the case, the fundamental picture changes for these companies because 85% of earnings are derived from the economy. So if the economy weakens, who knows where fair values are on some of these companies, right? I think some areas would be better. Cybersecurity, you know, you're going to need that. Rubrik, that's what they do. They're cybersecurity. They protect your data. Okay. Growing at 48%, down over 50% from their highs set back in September. Okay. Down 53%. Okay. So, like, hands down buy here. Right. But could this thing go to 20? It could. Could all of these stocks be like $10, $15, $20 stocks? It could. Could Palantir become a $40 stock? It could. You know, what happens if the S&P, dude, it's 3% off of highs? Nasty, dude. I need a drink. Fucking disgusting. Not the beer, this chart, man. Because we've never seen, again, a sell-off this aggressive. Like, it has targeted other areas, semis and all of that, but specifically tech and software, never seen that. Change my resolve position? No. Like, is it a good buy here? Yes. For like high risk, high reward. If we go into like a recession where credit dries up, the only way companies can raise capital is by issuing stock. That's problematic. From a company perspective, none of my opinion has changed. I just have no idea. Like, I see the path towards this weakness in the markets pressuring companies to cut back on capex, which cuts back on economic activity. I see the JOLTS job numbers that came out today. I'm actually not that concerned about that at this point. It's going to take more than one reading to make me, question the labor market. Are things great? No. Are we like recessionary right now? I don't think so. But somebody is going bankrupt. Somebody is under severe financial stress right now, and we don't know who. Now, the funny part about that is we might start to hear about these firms that are going bankrupt, or companies, or whoever it is. But the markets might buy that news. The markets might like rally on that news. I don't know about the headline S&P. I would hope the markets would rally on that news just because you're so washed out. But, you know, that's when you get a little bit more clarity. This is different than DeepSeek, right? DeepSeek was an easy let's buy because it was nonsense. $5 million to train a model. Yeah, right. Get out of here. Beyond that, even the story with AI is like every time you type something into ChatGPT or Grok or generate an image or use these agents, whatever it is, you're using compute, which you need data centers for. So it really didn't touch that aspect of the trade in general. It questioned maybe if companies needed to invest as much as they were on capex, but that was it. This, when you're dealing with companies going bankrupt, severe financial stress, liquidity stress, it is something you want to be a little bit more selective in the companies that you are buying, right? You want to buy bulletproof companies. Is Resolve bulletproof? No, absolutely not. They would have to issue a lot more in stock or cut back on the business, really scale, you know, focus on profitability. They could do that. But based on the economy, it changes the valuation for all of these companies. Now, again, with the whole software thing, I want to highlight this. There is no issue with software, okay? Some companies on the edges will be displaced, but if you guys hear the narrative that AI is going to, you know, disrupt software, that is not factual. Jensen Huang, okay, dude. Woo! Look at this. This is fun. If you guys did not see this from Jensen Huang, or you did not watch the channel yesterday, yeah, this is bad. This is what really like made me come to the conclusion that this has nothing to do with software in general. Okay, the whole OpenAI, Sam Altman saying we might lose leadership to China was definitely not good either. But where is it? I shared it. NVIDIA's CEO slams software sell-off as illogical. NVIDIA CEO Jensen Huang said the recent sell-off in software stocks over AI fears makes no sense, arguing that AI will use software tools, not replace them. Speaking at a Cisco event, Huang said AI has helped NVIDIA employees work more efficiently, freeing time to focus on chip and system designs, not eliminating the need for software. Jensen Huang said, look, the godfather of AI, of quote-unquote bubbles, said, look, y'all are tripping here. You're illogical. That means your logic does not make sense. It is illogical. It is a bad logic. And what happened? You got like a 2-hour bounce. Then you're back to getting smoked today. This is what really confirmed to me that this is not about any of the narratives you think. This has nothing to do with what Wall Street is saying right now. Like, I watched as many hedge fund manager, fund manager clips today as I could find, and they're all saying the same thing. They're saying, oh, software, AI, they're this or that. Nobody's talking about liquidity, somebody going bankrupt, OpenAI. I didn't hear OpenAI once today. Okay. Until you have like some clarity on this, Wall Street figures it out. It's a dangerous situation from a broader market perspective. Said 100% we are in a recession. Yeah. You know, I think we've been in a recession for a while. Like, average people have been in a recession for a long time. We do still have the big, beautiful bill coming. Hopefully more rate cuts. I know somebody asked earlier about the treasuries. Treasuries did come down today. Treasuries were a bit of a flight to safety. Not like a crazy flight to safety, like you will see if the markets continue to fall. People will flood into treasuries. But 10-year yields were down today. Right now, they're down about 4.5 basis points. Oil futures, something else to watch. If the markets really get fearful about a recession, you will see that in oil. Oil is up from the December lows, around $55 a barrel. So you can't get too concerned about a recession until you see oil plummet. Like oil comes down, 5-10% from here. Then you start to put recession on the near-term radar a little bit more. But again, that's just one thing to consider. 10-year treasury yields, though, did come down a little bit. The probability of Fed rate cuts did... I should really close out some of these tabs, huh? I feel like I use all of them, but I probably only use like a third of them. In all honesty. The probability of rate cuts did go up dramatically today. Okay, so look at this. All right, the probability of a rate cut March 18th, so in the next 6 weeks or so, went from 10.9% yesterday to 24.3% today. So people are saying, look, this is causing some pain out there. This is weakening the economy. You also had the jolts today and the initial jobless claims as well that caused this to go up. But as markets come down, you will see treasuries come down. That does kind of offset things a little bit. It does help the economy a little bit as treasuries do come down. But, I think we've been in a recession for a while. Big, beautiful bill. If real estate begins to pick up, those are good things. But again, is that more impactful than a liquidity crisis? No. This is going to take precedence over anything else, right? Big, beautiful bill. Who gives a shit? You just lost $3 trillion in financial markets today, including gold and silver. You're down like 6 trillion today. Okay. Or 5 trillion, something crazy. Who cares? Who cares about the big, beautiful bill and 400 billion in stimulus to consumers in that environment? He said, should we wait for the 20% drop? No. Well, you could do what you want. I don't know if we're going to get that. Just so everyone is aware, the VIX yield curve today went backwards. So it's called backwardation. What it means is it sounds weirder than it actually is. That means that people are paying more for protection in the VIX today than they are for 30 days from now. Okay. So normally you would expect for, premiums are time-based, right? So if I said to you, look, I will give you protection on your portfolio for the next 30 days. It's going to cost you $100. You'd say, okay, great. Well, what if I said I will give you protection on your portfolio for the next week, but it's going to cost you $200? You'd say, well, that doesn't make a whole lot of sense. Why do I have a month of protection for $100 and a week of protection for $200? That's the long story short of backwardation in the VIX. And it typically happens when you're done with a correction or pretty close to the bottom. But liquidity events are, always going to be up in the air. Okay. You just never know when it's fueled by margin calls, when it's fueled by somebody going bankrupt or some kind of I need money now kind of thing. You never know where the selling could go. But I do think, if you're trading this, no, I wouldn't be buying the markets right now. If you're solely a trader, no, this would not be the time to go out and go crazy here. But if you're a longer term investor, if you have a 2-month time horizon, I think, the probabilities start to get a lot better that that you would make money. Again, would I be buying the headline S&P here? No, right? No, because there could be a scenario where there's the inverse to what we've seen now, right? Where, you know, maybe some Mag 7 gets sold and defensives and healthcare and staples and some of the areas that have kept this market higher reverse, and some of those sell off, and then risk catches a little bit of a bid. Just the same as the S&P is only down 3% and software stocks are down 35, tech is down 35, could reverse. So I like the risk reward more in tech, specifically cybersecurity. That is one area of this that has been a screaming red flag, that it's never been about AI disrupting software, right? Why is cyber down? Now, I get it. Like IGV owns, cyber stocks and software ETFs. Like there are cyber stocks. There's Bitcoin miners in some of these software and tech ETFs. I don't think a Bitcoin miner is tech or software. I don't know what you'd call them. Okay. But probably not tech, probably not software. It's kind of its own category. Same is true for cyber. Is it tech? I guess. Is it software? I guess. But in this concept of being displaced by AI, I think cyber companies are going to be the ones that really snap back the quickest. Because I don't know. I don't think this is going to be V-shaped. Okay. Maybe that's just a feeling, but it doesn't seem like this is going to be V-shaped. When there's this much fear out there, when there is this much of a liquidity issue, my opinion, somebody big, maybe it's OpenAI, is going bankrupt or having severe financial issues, I don't think you're going to see a V-shape on that the same way as COVID, right? Where you had a pandemic and people are freaking out and then it's not nearly as bad as feared. Like there is something behind this. We just don't know of it yet. Thoughts on NAC? I've definitely seen that ticker before. Is it Northern Din? Chart looks good. Definitely looked like it had some upside momentum. But you really want to stay with quality in this environment. Ooh, look at that. The Don Killam. What's your take on 800V data centers that are coming? Which companies stand to benefit the most? God bless Creative and his family. Well, thank you very much. I appreciate that. Right, like before I would have said like, Oracle, like the typical, data center companies, they're all going to integrate the latest technology. And honestly, like going with some of those, you might get love versus some of the smaller ones, right? Because there's always going to be that aspect of big money is nervous about smaller companies and companies that aren't as proven. Iron actually looked really good in the numbers today. That surprised me, even though the stock sold off a lot. But right now with data centers, you are taking on a lot more risk, okay? Just because of the narrative out there, right? The narrative that capex is bad, like spending too much money on AI is bad. That is a very dangerous narrative for data centers, okay? Now, I think things are going to be fine, right? But if this is not V-shaped, if you actually were to see that narrative that continues to get thrown around, I'll tell you now, Jeff Bezos doesn't want to lose his, what, $100 million. How many shares does Bezos own? Okay, let's go ahead and Jeff Bezos share count in Amazon. He owns 883 to 964 million shares of the company. He owns 9% of the company. You know, these guys that have a lot of wealth in the company, executives that have their pay tied to the stock, they're going to listen to what Wall Street says. And, you know, it's far too early to draw the conclusion that AI is dead, data centers are dead, companies are going to cut back on capex. But I've seen this happen in 2022. Like, Meta was bullied, okay? That is what happened today to Amazon. That is what happened to Google. That is what happened to Microsoft, okay? We have a playbook, though, because Meta in 2022, Meta was outright bullied, okay? The stock went from $381 per share down to $87 per share. Now, the markets were in a bad place anyways, so that didn't help. But Meta stock went down from high to low 77.5%. Okay? Zuck lost his ass more than anyone else, like, relatively speaking. So if Wall Street doesn't like the capex, companies will cut back on it. And even if a data center company is doing well, even if they're beating numbers, like doing all the right things, if the narrative shifts, it doesn't matter. You know, kind of like right now, you have A-plus software companies. ServiceNow is a good example. They just beat top bottom line margins, issued a $2 billion accelerated share buyback program. $5 billion total, but $2 billion accelerated. Stock got crushed, okay? Because all of software is out of favor. So you could pick good companies, quality companies. If the mood sours on them, it's not going to matter. The stock will not get re-rated, okay? So Adobe, I had somebody ask me recently, like, why do I not love Adobe? It's cheap, they're growing, they're doing well. Why would I not invest in this company? Because the multiple has been eroded. Like, the company's doing better now than they were over here in 2021, substantially better. The company's growing at over 20%. But here's the narrative for Adobe. The narrative is that AI will make Adobe obsolete, put pricing pressure on their business model, so on and so forth. Even if that is completely not true, like, when is Wall Street going to say, okay, Adobe's fine, right? I have no idea. That could be 10 years from now, right? The other problem with semiconductors and data centers largely is that they are boom and busty historically. They are cyclical historically. So again, kind of to the same point. If you do see the economy take a hit from this, if OpenAI theoretically is going bankrupt and that causes a lot of damage in the economy, you know, companies will just cut back on investments in data centers. And it's not really about the number, the size of the business. It's about the growth of the business, always. Like, you know, oil. The oil industry is a lot bigger today than it was 50 years ago. I don't even know the numbers to tell you, but I can tell you that factually. Oil company stock valuations, I could tell you, are probably a lot cheaper today than they were before. Probably a bad example right now because Trump and drill baby drill, it's a problem. Same is true with GM and Ford, right? EVs and hybrids are the future. GM and Ford, specifically GM, doing better than they've ever done before. Okay, or since I've been around, GM's actually doing really well. But the logic is they're not innovating for the future, so their multiple just goes down year after year after year. If there are concerns around AI and maybe it's adoption, maybe it's valuations, maybe it's, who knows, maybe it turns into energy use or water use or whatever, then the multiple might be under pressure, even if the company does well. Even when the markets bounce back, like they could definitely, I expect the markets are going to bounce back, probably here pretty soon, at least short term. But even with these software stocks, like I'm not expecting next week or next month that ServiceNow is going to be a $200 stock again. ServiceNow, A+ company. They are benefited by AI. They are, A+ company. But I don't think they're going back to highs anytime soon, because it takes a while for narratives to shift and multiples to shift as well. And when you're dealing with a multiple issue, quote unquote, again, like, I don't think that's actually what's going on. I think it's a liquidity problem. But Wall Street, they're going to come to their own narratives to fit whatever's happening in the markets, right? If markets fell 20% one day and nothing happened, there was no headline news, people are going to make up reasons for it, even though nobody knows anything. That's a famous quote from Steve Mandel. Nobody ever knows anything. Like, I don't 100% know that somebody's going bankrupt, but the price action is telling me somebody is going BK right now. Somebody is like in what's it called? Not depository, repository, where they get their assets, split up and collect everything, right? Who and what and how severe and all of that would be. It's bad when TCI isn't posting Resolve videos. I just think for a risk-on market, Resolve is probably the best stock on a risk-reward basis, especially around these levels. I just don't know how fast we're going to go back to risk-on. Like, 2026 might be a year of the boring stocks win and prove it on the AI theme. Prove it on the software name. You're not going to be disrupted. Prove it. And we've watched Adobe try to prove that for years, and the stock has been disrespected. So the timeline, very sketchy here. But, again, you've never seen this before. The RSI on ServiceNow is at 22. I'm sure it's been lower than that before. No, the weekly RSI on ServiceNow has never been this low, right? The daily RSI on ServiceNow is sitting at about 21. That's obviously been around there before. IGV, the daily RSI is at 25. You've really never seen this before. Going back to, or this is the weekly. You've never seen this before. Besides 08, briefly. And during 08, you fell, I guess from the high, you fell 51%, okay, in 2008. So you're down like 35% right now, but the velocity would say that we probably bounce pretty soon. But if we bounce, is it like a short-term bounce and then you just come right back down and hit new lows like a dead cat bounce, or is it something that's more sustainable? Was it this bad last April? Yes and no. Last April, it was basically everything. So markets went down a lot. The headline went down a lot. But you recovered really fast. You had that 10% day. I was actually showing my mom that not too long ago. I'm like, oh yeah, like Trump moves the markets. And I was showing her the day the S&P went up 10%. The only time I've ever seen anything close to that was COVID volatility. Markets would go down 7%, then go up 7% based on case numbers and new variants, right? Well, you fell 9% the day before, circuit breakers, next day you're up 10. So that was fast. April was fast too, but I can't understand why they all seem to feel the need to spend so much on AI, because if they don't, somebody else does, and it's not about right now, it's about the future, right? So, 3 to 5 years from now, if Meta was the only one if Meta was spending $150 billion a year and Google, Amazon, Apple, all of those guys were spending, like Apple spending $14 billion this year on capex. I think that's including an acquisition that's like $1 billion, something like that. Then presumably in the future, Meta would dominate in whatever they're doing, just more money, more investing. So kind of like this self-fulfilling prophecy. It's also getting ready for like future projects. Like, we're retail investors. We love to speculate and throw out opinions. Like, I believe AI is going to make, my daughter's daughter's probably going to live to be 200 years old. That's just, my speculation. I think that, healthcare is going to be really impacted by AI in a positive way, I would hope. As long as AI doesn't become sentient and kill us all, then, it should be good. Like healthcare specifically, all of that takes a lot of compute. And then there's the weird aspect of like what Michael Burry says, where these chips actually go bad or not as good after like 2 or 3 years. So you depreciate that over 2 or 3 years versus companies are depreciating it over like 5 to 6 years. So basically what's happening with private credit right now is like the write down of OpenAI, that instantly gets wrote down, right? There's no real like depreciation on that. It goes from 800 billion to 400 billion overnight with this funding round. With the chips, if companies depreciate them over their actual lifetime, 2 to 3 years, you take $40,000 per chip, whatever the price is today, times 100,000, right? And then divide that by 2 or 3 years and be able to, you'd take losses on that. It would really kill your earnings. Instead, companies are spending all of this money, depreciating them over 5 or 6 years, so it kills your earnings a lot less and makes them look higher than they actually are. That's the whole Michael Burry argument. So there's maybe some of that going on too. Who knows? AI will only be a tool for these software companies, not replace multi-million-dollar deployments of Oracle. Oracle is kind of reckless, right? I've never seen a company $500 billion after their stock is down 40+% from highs say that they're going to sell stock. I've never seen that before. That means that private credit will not, work with them. That means banks won't work with them. At least to the amount of money that they need. I know it's like 25 billion in stock and 25 billion or 20 to 25 billion in like equity financing or like bond financing, but that's a really bad sign, I think, for private credit and also for the state of Oracle. Like, I own a little bit of Oracle, but that one's really a show me story. They're not supposed to be free cash flow positive until at least 2030. Yeah, like, man. And then they're selling off assets to fund their AI capex. Like, their whole business model at this point hinges on AI being a massive success. Anything less than that, and Oracle is in a world of trouble from a stock price perspective, at least. I mean, if they canceled the OpenAI deal, I don't know if they could do that, but at this point they probably should, right? Just, stop Oracle would probably help the stock out. It would probably do a lot better. They have a lot of different branches to their business. It's a pretty diversified business, but they are just all in on building these data centers, and it is as was it the Financial Times? TD Cohen said that the OpenAI deal is eating Oracle financially alive. So yeah, that's rough. You see that Rakuten took a small position in Resolve. Why does that look familiar? But I don't know who that is. Watch, it's like somebody huge, and I do. How is it? Oh, what the hell? We know you only use us for money. We're cool with it. I'm so confused. Should I know what this company is? Why do I not know what this company is? Is it going to let me? Right? I have to know what the company is, right? Is this like an American company? I didn't see they took a stake in Resolve. Oh, it says beyond the stake size. Holds a small stake in Resolve AI. Nice. According to institutional ownership data from early February 2026, I don't even know how to say that. Rakton holds approximately 63,916 shares in Resolve AI. This holding represents a very small percentage of total shares, reported as roughly 0.01%. Beyond the investment, Rakuten is a major enterprise client of Resolve AI, utilizing their platform for retail-focused AI solutions. Wow. That's interesting. When would that... Did I miss that today? Was that a today thing? I don't know. There was a lot of crazy shit going on in the markets today. So, yeah. Huh. No shit. They did. I mean, it's only $164,000, but whenever you have like clients investing in you is typically a really good sign. Now, just no more dilution, please, and we'll be good. I wish I had more dry powder. Yeah, receivership is the word I was looking for. Yeah. I wish I had more dry powder too. Like, for real. Just need a paper trading account that's not a paper trading account. Just, give me a couple million to invest with like a 5-year time horizon. We're gonna be swimming in money. Thumbs up on the stream, boys. Yeah, that's right. That's right. Thumbs up. We'll definitely do more of these. It's been a while. I think the last one was like Resolve, maybe a Resolve earnings. Maybe the first one. I can't believe I bought Resolve. Like $1.90, $2, $1.70. Rode it all the way up to $8.50 to the high. Didn't sell any of it. Here we are, boys. We're back. Oh, I was up like 200,000, or maybe it was more than that. It was like between 200,000 and 400,000 on Resolve, and believe in the company, but I guess shit happens. Tyler, been watching you for 3 years now. Keep up the good work. Also, stay away from UiPath. Really? You don't like UiPath? UiPath is one of my favorites. But there is like execution risk. Like the company has to execute for sure. And the CEO sounds a little sketchy, but I think I was judging him. I'm not gonna lie. I think I was just judging him. I think he's Russian. Like, I don't think he's American. I know they're an American-based company, but April was just the tariffs. Now it's many things, even potential war. Yeah, there is a lot going on right now, honestly. They sponsor FC Barcelona. Interesting. Cash back for clicks. Man, watch me. Click, 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 click. I'm going to click up a couple shares. What stock we looking at right now, bro? It depends on what you think the markets are going to do. If things go back to how they were, a month ago, then, then it's high risk, high reward kind of trades. If we have like a recession, then that if that's your thoughts, you probably wouldn't be buying anything, like nibbling at best. But I'm somewhere like in the middle. Like, I don't think we're going to snap back here. I don't think we're going to have a recession. I think volatility might be with us for a while. Okay. Ooh, maybe this is happening because somebody knows the Supreme Court ruling. What if that was the case? What if we have a black swan event on the Supreme Court ruling? But the ones I've been buying recently, UiPath, I would love to hear why it's bad. UiPath, a lot of UiPath, too much. Because I view that one as like, it's such a stable business overall. Like, it's not going to be disrupted with AI agents. Like that's just not in the cards. They're using AI, as Jensen said, like, you know, AI is used well with software, not without it. Even NVIDIA uses software. But Zeta, yeah, Zeta's a good one. I did not like the price action today of Zeta, though. And again, price has a meaning, right? Like, normally price has a meaning. Like, there's no surprise when a stock craters before earnings and then craters after earnings or has really bad numbers, right? Somebody knew something. Zeta has kind of held up a lot better than other companies, but today was really nasty. I believe it was down more. No. Okay. Not too bad. What was the one? Rubrik was really bad today, but Zeta, Rubrik, UiPath, those are clear buys right now, in my opinion, that, again, my opinion, don't have any like AI disruption risk, or if so, like very minimal. It's just, these are very vertically, horizontally integrated businesses into companies. Zeta might have the most like AI risk, but I don't even think like there is an AI risk at this point. Like, Zeta has trillions of data points on people that, you know, like, for an example, with Zeta, if you click on something that's related to a product, Zeta's going to know about that. If you hold your cursor over a product for 2 seconds without clicking on it and click on something else, Zeta's going to know that, right? It's steering companies to advertise certain things at certain places for people. Zeta's down 6% in after hours. Is that real? No way. What? Why did Zeta get smoked so much more than other companies? Down 6% in overnight trading? Holy moly. Dude, liquidity is just coming out of everywhere. Now, with Zeta, I've bought, I own 150 shares in this portfolio. And this one, I own like 600 shares, 500 shares. Not a huge position. Just because they do have more meat on the bone, they're not as washed out. RBRK, yeah. Rubrik is a real winner. Did you see last night they said they beat on all metrics and had a really strong quarter? Like, AI agent, cybersecurity, that for sure is not going to be replicated by AI. I can tell you that one. But, like, disrespected. Stocks are just getting disrespected out here. Disrespected on these streets. Like, it doesn't matter. Good earnings, bad earnings, mediocre earnings. Like, you have bad earnings right now, dude, you're down 30. You have good earnings right now, you're down 10. Look at Roblox. Who doesn't love Roblox? I don't love Roblox, but, you know, just about everyone else does. Okay? Look at this stock. Face ripping rally. Thing was up like 25%. I'm like, I think I said it out loud to my son. I'm like, there's no way Roblox was up 25%. Like, that's the one that went up 20% after earnings and held it. I think I said in a video, maybe it wasn't in a video, I think I said it to somebody today. Maybe it was myself. Things are getting a little crazy out here. That watch this stock go red tomorrow after posting like a blowout. You're only up 8%. You know, you've already given back 2/3 of the move. Reddit too. Reddit, I don't know how they do it. Honestly, I've never been a Reddit user, but I did just sign up like a couple days ago, and I actually like, I think it's really cool to like do research specifically for stocks, see what people are talking about. They kill it. Like every quarter they do really well. One, the stock is just imploded just like everything else, but great earnings, fantastic. Stock was up like 20%. Now it's only up 6%. Like any sign of liquidity coming into a stock gets sucked out of it just as fast as it came in. That's crazy. I mean, there is zero reward for companies to beat right now. Companies, look, are better off just not reporting earnings. I mean, I know they have to, but like if you don't have to say anything right now, just don't say anything. But yeah, what's your take on NVTS? Man. NVTS, so it's been a while since I looked at the stock, but I bought it at $1.70 or $1.50, something like that. I sold it at like 4, 5, something like that. Yeah, I bought the stock back here, guys. Yeah, because I said that I like in my head, and to people in the trading community, I was like, look, this stock, this company, they're doing something here. Just a potential partnership wasn't even remotely thought possible at this point when it was $1.50. It obviously rallied. I sold it at like 5, something like that, 5, 7, whatever the first rally was. I was like, get me out of this stock, because I was in the stock before and lost like 30% and then just held it because I'm just going to hold shit when the price doesn't go the way I think it's going to. And then once I got that rally, it was a huge rally that day. Yeah, 164%. I was like, yep, get me out of this thing. But, you know, still like it for what it is. I don't remember much about it. I know they're the gallium nitride. There's like certain aspects of that are much better than silicon, but you know, especially right now, I don't know. The whole, if Wall Street is going to punish companies for capex, that throws a whole wrench in the AI trade, because the pillars of that are capex. Like SanDisk, I didn't look at that thing today. You know, SanDisk is getting smoked if the AI capex story changes. You know, down 4% in after hours. It was only down 1.5% today. SanDisk was an outperformer. I know they had crazy good earnings, but are you still holding Poet? Yes. So a company that a lot of people kind of, you know, point to when it comes to Poet as like a competitor or somebody in that same field is Coher. Coher, I think I'm saying that right. You know, they had a very volatile reaction to earnings. At one point, the stock was down like 20%. It did come back a bit, but that kind of hurt Poet at the same time. You could see that it was a nasty reaction at first, dropping from, you know, 219 down to 167, and then right back up, and then, you know, obviously this market's gonna sell everything. Held up pretty well today. Caught a bit at the open, so should kind of work in sympathy. They're a little bit different. It's like lasers and all that, but it's a stock that tends to move with Poet. I do really like Poet. Poet's a news stock, though. It's not a stock that's, I mean, They're going to start production second half of this year, but it's really only going to move on the headlines. Like, we haven't heard anything as far as contracts for Poet. That's what's going to move it. If they announce like $100 million contract with Meta, all that, then that's going to move the stock. But that's the dangerous part about capex, right? Capex slows down. That's an issue for Poet. Like, companies right now, I'm sure I would bet my ass that Amazon and Microsoft and all the guys that were punished for the quote unquote capex, which again, I don't think that's going on, but we don't know why markets are selling off. So Wall Street's going to spread this narrative. True or not, I don't think it's true. I don't think companies are getting punished for spending more, investing more. Like Dan Ives said today, like, he doesn't get that. Companies should be spending. Like, if Google doesn't go on the offensive, they're screwed 5 years from now, 10 years from now. Somebody else is going to come in, take their business with AI, right? They have no choice but to spend. But I bet your ass those companies that got punished on earnings for, again, spending on AI too much, they're in group text right now. They're in conferences right now. They're asking each other questions like, should we slow down? Should we stall on this partnership? Should we wait to sign this contract? Should we not invest in OpenAI? Because they all have personal fortunes on how the stock does. And again, everyone knows what happened to Meta when Wall Street bullied them. They do not want to be bullied because of their spending money. Like, Meta, after 2022, they said, look, we're done spending like crazy. We're still going to work on what we're going to work on, but we're going to prioritize shareholder value. Stock never looked back, right? Wall Street will get what it wants if it bullies hard enough. So if that's the narrative we run with, too early to say. That's a narrative that just showed up 2 days ago. We'll see what the narrative is a week from now or 2 weeks from now. But if mega cap tech is spending too much on AI is still the narrative, I would want to stay away from any new positions in any data centers, energy. Like, the boring stocks would be the stocks. You actually want to know what stock I bought this week? Any of the guys in the trading community already know about this one because I share my trades when I make them. But Keurig Dr. Pepper. Woo! Fuck yeah, dude. I hope somebody owns Keurig alongside me. I'll tell you why I own it. And it might be a stupid reason to own it. But Keurig. Yeah. Keurig actually owns a lot of very popular brands. So let me Keurig Dr. Pepper brands. Dr. Pepper. Dr. Pepper. Okay. Dr. Pepper, 7-Up, Crush, Sundrop, Canada Dry, Sunkist, Squirt. I actually bought some Squirt because I invested in the stock. I'm like, it's been a while since I drank some Squirt. So actually bought some of that. Hawaiian Punch, Real Lemon, Snapple, Core, Core Hydration, Yahoo, RC, A&W, Big Red, Verner's, Venom Energy. I know a lot of people be drinking that shit. Margarita, Mix, Cactus Cooler. Like, I know of pretty much all of these brands minus a few. The buy like drinks. For Keurig. Some of these I didn't know. Like, when was McCafe not owned by McDonald's? Huh? Right? You ever seen this coffee in the grocery store? And you're like, okay, that's a McDonald's coffee. I guess it's not. I guess it's just like a licensing like thing that they have with McDonald's. Okay, whatever. Keurig, obviously. Green Mountain. This is the coffee I drink. Just black, straight up coffee. Swiss Miss, Krispy Kreme donuts. I think some of these are like licensing things too. The Donut Shop coffee. Newman's Own. I've seen that logo before. Cinnabon. Okay. some of these others right here as well. So, you know, Mott, their partner brands, C4, Evian, Vita, Electrolyte, Starbucks. Okay, right. You get the idea. My sister is like addicted to Dr. Pepper. She would rather be broke than go without Dr. Pepper. But another reason I bought it is because if you look at Pepsi, they're trading at like a 28 PE, something like that. Dr. Pepper is actually growing nice. They have like a 3.5% dividend, and they're only at like a 23x PE, right? And for the whole Snap thing, that's what hit these stocks last year. That if you can't buy food and drinks on like a food card, then these companies are going to take a hit. But I think that would hurt more like snacks. I think people are going to buy their favorite drinks no matter what, right? Even if you're down bad, if you're my sister and you had $7 to your name and a Dr. Pepper cost you, $4, she gonna buy a Dr. Pepper, right? Everyone's probably not to that same extreme, but you're gonna buy the dollar soda before you buy the $5 bag of Doritos. So the stock came down, obviously, with that news. It still hasn't recovered. Just to get back to where it was when that news came out in August of 2025 would be a 26% rally. If we do have a normal, like, boring market in some areas of this market, like if the AI trade does give back, this thing could easily get back to the previous highs, like back in summertime, right? I don't think it's going to hurt the numbers nearly as much. And if you get back to the highs, then you're like $37 up the dividend, anything like that, then that could do pretty well. For oil, I want to share this one as well. I already shared it with the trading community guys and gals. We got some gals in there too. I should highlight you guys. APA. I bought APA. It's an oil company, like a mid to low tier oil company. They've had their problems. They did an acquisition back in like 2007, 2008. It was a $107 stock. It's like a 7 PE versus the other guys that are like a 10 to 15. And, if oil does well, the recent highs back in October, like 2022, relatively recent highs, would be a 70% upside move from here. Oil is already low. As long as we don't go into a recession, oil's not going to fall further from here, or not that much further. Like, you're already pricing in that oil has fallen risk. Stock, this is a weekly chart. Ever since that, April spring low, it's been an uptrend ever since. It's usually a good strategy to buy stocks that are trending upwards. So risk reward wise, I wanted a little bit of oil exposure, and that is the one that I went with. Chart looks beautiful. Valuations lower than others. Oil prices could go up from here versus go down a lot more. So that is one that I recently bought too. I bought a little bit of it's not Moderna, it's not Molina. Is it Molina? I think it's Molina. Like, not a lot at all. I bought like $1,000 worth of Molina. Okay. Just for any kind of recovery. But, I wouldn't have super high hopes. This is like a multi-year trade. Like, if you want to double pretty certainly in the next couple of years, like Molina, UNH, right? Tempest AI and Iron screen buys. Honestly, I don't know that much about Tempest AI. I know, like, Kathy invested in them, or not Kathy. Did Kathy? I think Kathy did. Nancy, right? But I don't know a whole lot about them. That's one that I should probably look up on a little bit more. I just know they were up a lot more, like a lot, when I was looking at them when it was really popular. But it is down like alongside other stocks. The thing you really got to think about here, right? And if you take anything away from this live stream, is this. You only want to be buying companies right now that could weather a recession if one comes, because you make money when you buy a stock, right? Everyone thinks you make money when you sell a stock. You make money when you buy a stock. Warren Buffett didn't make, it's like more in dividends than, I forget the stat, but Warren Buffett makes crazy amounts of money on the dividends of Coca-Cola when he owned it. He didn't make, technically he made money when he got paid dividends, but if he never bought the stock, he never would have made the money. If you buy a stock at a bad price and it's a bad company, you're never going to make money. I'm not saying Tempest is a bad company. I'm just saying in general, especially when liquidity begins to dry up like this and there's no certain timeline when things are going to improve, you want to be a little bit careful, go with more quality, because example, back in April, right? Everyone knew that was a short-term thing. Everyone knew that Trump was going to pivot. Everyone. We just didn't know when. So liquidity was drying up, fear was drying up, nothing like this, right? This is full-on meltdown, full-on liquidity vacuum. People want out, they want out. Now, somebody is under a lot of financial stress. Much different now than you had in April. But you knew things were going to kind of snap back to where they were. There was I guess there was systemic risk if tariffs were to be a really bad thing. Not a lot of people bought that narrative. Some people did, and some people still do think tariffs cause inflation and, tariffs hurt the economy to a certain extent. They do, but not that much, right? A trade embargo with China, as I was saying back then, would have caused a likely depression. You just cannot operate with zero trade with China. We have lived on a globalized economy for a very long time. It's going to take a while to onshore enough things where you don't need China. China needs us, we need China, right? That's just the way it is, economically speaking, at this point. So that was the only thing I was really concerned with. But you put 100% tariff on China. Trump doesn't want a recession. Trump doesn't want a depression. That's part of this too. I'm look, if Jensen Huang, the guy, came out and said, you guys are silly for selling software stocks, and nothing happened. You bounced for 2 hours and then sold it all off. That's not good. Somebody is under way too much financial stress right now. Some of us are we want this to chill out a little bit. I'm cool with it, trading around here for 6 months, a year, 2 years. Fine. Give me time to buy, right? It really sucks when it's going down this aggressive, because you don't even have time to collect your thoughts or do much research. You're just getting smoked every day, right? But again, then we knew things were going to kind of just bounce right back to where they were previously. This, you don't know if they're going to bounce right back. Software is definitely not going to bounce right back, right? It's going to take some time. The whole AI is going to kill software narrative is going to take some time. And some of these lower quality companies that can be replicated will never go back to their all-time highs. Okay? You will remember this moment as an actual event that you will talk about years from now and say, I really wanted to buy that stock and I'm glad I didn't. Or I bought that stock and I'm glad I did in the crash. There's going to be some that make you a ton of money, and there's going to be some that never recover. Even Team today, Atlassian, they are growing very well. 23% growth. Their RPO, their backlog for their products, up 44%, I believe the number was today. They reported earnings today in after hours. Companies doing, I believe, the best they ever have. And the stock went down 3.5%. It's software. It's just, that's the narrative right now. And is Atlassian ever going to get back to $483 a share? Or is it ever going to get back to where it was January of 2025 at $330 per share? I don't know. It would take one hell of a multiple re-rating, or maybe a decade of earnings to catch up, you know, to where it was. Because if a multiple goes from 20 and you're doing $1 of earnings, right? That's a 20 times multiple, right? Well, if that falls, if the multiple comes down to 5 and if you're doing $30 of EPS, your business might be doing the best it's ever done before, but the stock's still going to fall. That's kind of the problem that has plagued Adobe for years. It's not that the company sucks. It's that Wall Street just doesn't believe that they're going to come out of AI alive. And it's going to take some time for Wall Street to start to believe some of these companies are going to come out alive. Specifically, cyber companies. I think cyber companies are going to have one of the fastest like snapbacks or V-shaped recoveries. Like, it's going to be really pockets of this, okay? Cyber, though, I think if there's any area of software that does come back, or it's not even like software, I guess, right? It's cybersecurity. It's a little bit different. Like, it's mission critical. You have to have it. I think that's the place I'm most confident in for the next 12 months at this point in the markets, no matter what happens. Okay. If AI goes to shit, cyber's still going to have demand. Okay. Talon, what's up? How are we? AI goes to shit, cyber's still going to be fine. It's still going to have its demand, whatever. Like, recession, cyber's still going to have demand. Okay. You know, could it fluctuate a little bit, or growth rate's going to slow down a little bit? Maybe, but probably not. Like, AI is not going anywhere. Like, going to shit, I mean, like, the hype around it. Like, eventually, semiconductors are going to be seen as like the Cisco's, not in the sense of the stock like went up and came down, but like telephone, like supply, like companies that built telephone lines and the actual framework for the internet. Nobody cares about those today. That's not the thing. Like, eventually semiconductors will be not the thing anymore. It'll move on to something else, and software and agents. And I do think that will have a moment still, but you know, timelines maybe got pushed back here. So, you know, you want to be a long-term investor, but not a 2-decade-long investor in some of these. CVS could be the better one in the healthcare sector. Yeah, CVS, their most profitable part of their business, though, the PBM, is it PBM? PRM? Because I invested in CVS and I thought it was going to be a long-term hold. I forgot why I changed my mind, because normally when I buy a stock, I like hold it. It was definitely like 2022, 2023, 2024. Like, in here, I probably sold it like maybe 2025. I can't remember exactly, but that's one area of their business that like gets a lot of scrutiny, and that's where they make like all of their profits. So there's just a lot of profitability risk if like the government said, look, you guys can't upcharge between, you know, basically filling prescriptions and dealing. Like, CVS makes their money, from my understanding, correct me if I'm wrong, a majority of their money from like the premium they get for filling prescriptions. Like, if a prescription, like the actual medication, cost $25, then CVS will work with the health insurers and charge $50, right? You know, they charge $50 or $75 and CVS gets a cut of that. That's my understanding of how that works. I might be wrong. It's been a couple years since I like looked into it, but there's a lot of risk in that middleman kind of thing. But other than that, I mean, CVS like pays a good dividend, last I knew, unless they cut that and I didn't hear about it. But the reason tech's selling off, that signs of a slowdown and a mid-recession, you know, there's like no evidence of that though. Like in like some of the recent job numbers, people are excluding immigration because that added to job numbers. I don't know by how much, but there's definitely been a slowdown there. Like unemployment rates, like things have things have been fine. Like, things are not great in the underlying economy, but they're not terrible either. Like, I don't think we're actively in a recession, but there's definitely like stress out there. Like, a recession is, you don't know if you're going to lose your job next week. Like, if you're in tech, if you're in this or that, you're definitely in like a labor recession right now. But I forget where I was going with that. But yeah, I don't think that's the reason. I could be wrong. Like nobody knows anything. Like, these Wall Street guys, they're just saying what makes sense to them. And none of it makes any sense. Because, again, why would Robinhood be selling off? Okay. Why would cyber be getting pummeled? Okay. I could understand the argument of like a Wix or a Monday.com or something that's not very integrated with company data, that's easy to replicate. Like, I get it. Like, those are other two companies that I wouldn't exactly be rushing into right now. Right. But there's a lot of them that like have zero chance of being disrupted. This is, in my opinion, most certainly a liquidity event. I mean, I've like major crashes. I've seen 2018. There was a bit of volatility in early 2019 as well. I wouldn't call that a crash. So 2018, 2020, 2022, the April crash of this year, that's 4 like 20+% drawdowns. And this one it feels different because it's so violent in the risk on areas, like so violent. It could be the start of a recession, no doubt. Maybe the jobs report was leaked to somebody. Maybe the jobs report was like negative 500,000 jobs, and it's like, there's no way you're avoiding a recession. That is possible. Just don't like know that at this point, if that makes sense. DGBI. Is it this? Can't be this. No, it can't be that. That's 2020. It doesn't come up. So if it's like OTC, I don't think it comes up on Webull. CSX could work on dip that report last month. I lost all my gains from the past 6 months in 4 days. Yeah. Yeah, me too. Yeah, we'll be rich soon. I don't know about soon, but eventually. Like soon is always a relative term, and I think you're being sarcastic with that, but you know, when you have a sell-off that's on panic, fear, liquidity issues, like, you know, you're eventually going to recover. But what does the multiple go to? So if you guys don't follow me on X, you definitely should. Sometimes I post just, you know, stupid shit and goof off or whatever you want to call it. But sometimes I'll put out like deep thought out reports and share things that are really important, share other posts from other people. And let me find it. Plunge protection team. I said, Donald Trump, a tweet telling people to buy stocks right now would mean a lot. That was funny. But let's see if I can find it. I shared a lot today. It's showing valuations. Yeah, so one, software is at its most oversold level since 2018. Like, this is how you know it's a liquidity event. Again, some of the other stocks that are not software, cyber, I know they're getting dragged down by like ETFs as well. But crypto, if this wasn't a liquidity event, crypto would not be at, Bitcoin would not be at 60,000. Where is Bitcoin at actually? Bitcoin, hello there. Did anyone buy the Bitcoin 60,000 dip? Hello. Pretty cool. But let's see, there's a post here. Yeah. So multiples, right? This is the question. Multiples. The 12-month PE has compressed from 33.1x to 23.2x, multiple contraction of 30%. Valuations are now approaching the 2022 and COVID lows. The multiple's now around 20. This was February 3rd, 2 days ago. The multiple's around 20 now, literally at COVID lows. Like, this is cheaper for any of these software stocks. You have seen, not any of them, like they're all going to be specific, but in general, as the basket here, you have not been able to buy this area of the market this cheap since 2020. The low. Like, that is a massive multiple re-rating. It might take some time, might come back a little bit faster, but you know, we just don't know why this is happening. Like, people think they know why this is happening. Like, people just, you know, are gonna put a conclusion to everything, just like I am, right? I'm saying somebody might be going bankrupt. There's severe financial stress out there, something we have not seen in a very long time. But how fast does the multiple recover? Where does the multiple go? I think it's really going to be on a stock by stock basis, and that's why you want to focus on one like quality, like not just quality in the price, but like quality in the business model as well. Where's that quote? There's a quote that I shared in some of the last videos, again, from Steve Mandel. He says, I don't need an analyst to tell me when a 10 PE stock is cheap. I need an analyst to tell me when a 40 PE stock is cheap. So, you know, valuation, quote unquote, like, it only matters so much. Like, you still want to buy the quality stock. Like if a quality stock was a 40, 50 PE before and is now a 20 PE today, that's much better than a 20 PE stock a month ago that's now a 10 PE stock, right? I don't really care about the multiple, because in fact, you probably want to go with companies that had a higher multiple before the sell-off, because they were obviously like higher growth, doing something better. The multiple might like come back. There was a reason for that to begin with, right? This is not the first time a conference board got together to discuss how AI was going to affect Palantir, right? Palantir has a high multiple because it's very undisruptible. ServiceNow has a high multiple because it's very, you know, indestructible from AI at least. You know, Rubrik has a higher multiple because it's very well insulated from AI. You know, so just want to be a little careful in that regard. So I just followed you every other week, so you might not see me at times. That's all good. I'm surprised I haven't been banned on there. I say some pretty wild shit sometimes. I am losing so much money now. My money is losing monies. Yeah, my money had babies and lost them. Fucking CPS coming for my monies. Terrible. This is like really, I mean, I've been through quite a few of these crashes, and this one is definitely different. It's liquidity, right? Somebody is going belly up right now or very close to it. And some lender or lenders are trying to shore up their books. They're trying to pull liquidity together from everywhere they can. That's why I think it's probably OpenAI right now. Now, is OpenAI like on the verge of bankruptcy? Maybe, maybe not. Maybe the funding round has failed and we just don't know about it yet. Maybe the narrative will be OpenAI has 2 months to live. That's how much cash they have. And if they don't get funded, they're screwed. You know, what do you think that's going to do to the marked valuation of OpenAI, right? If they had a $500 billion capital raise, well, not $500 billion worth of capital, but they raised capital at $500 billion, you know, there's a lot of like collateral and lending that takes place on top of those investments, right? Like this is the chart of OpenAI's ChatGPT's like valuation. What was it? I thought I seen a SoftBank. I know like SoftBank specifically was a big part of this. One of these valuations, I think it was this one, the $40 billion capital raise in March of 2025, at $300 billion, right? And then there was a $6.6 billion capital raise at $500 billion valuation. People are lending like OpenAI is worth $500 billion. Again, it's like you bought $1 million house, cash, and then bought a bunch of rental properties. You went to the bank, pulled $600,000 out, bought a bunch of properties, and now the bank says, "Hey, look, you're break even on your loan now because your house is only worth $600,000." Like that is what happened. And then every other house you bought just got devalued by 10 to 50%. Right? That's what are you going to do in that scenario? You're probably going to sell a house or two. You're probably going to get a second job in reality, or make as much money as possible. What these firms do is they pull back credit. They start selling positions, the most risky ones first, right? Much the same way as you would if you had a margin call. If you have a stock that has 100% margin maintenance, you're probably going to sell that one before you sell the stock that has 25% margin maintenance. That really isn't moving your margin budget all too much, right? So that's kind of what's going on. Like this happens all the time with small companies, but when you're talking like an Oracle or damn near a Tesla that is in the AI theme, that was the first mover in AI, really, it's gonna cause a lot of problems because again, if you're some of these lenders right now, or you're a market maker and this news is coming out that OpenAI just got devalued, you already know that's going to cause stocks to most likely crash. You have to price that ahead of time. So something else is going on here. This is not just the software shit. It's leverage. It's, I think it's OpenAI. Like, there is no way, there is a 0% chance in my mind that OpenAI has a $500 billion value today. 0%. If the stock was trading on the markets, it would probably be $100 billion or less right now. Now, how do they market in private credit is going to be a lot different than how they market elsewhere. You can mark something for whatever you want. I could say this house is worth $10 million. Is it? No, right? It's worth like $300,000 on a good day. Okay. You could do the same in private credit, but raising money at that valuation is a different story. And OpenAI needs to raise money right now. So again, when you have mega cap tech companies that have a bunch of money and they were interested in being a part of capital raises before, and now they don't want to, you kind of kill the valuation because private money, private lenders, they're not going to stick their neck out on the line and potentially lose a massive chunk of their investment. They're going to account for that. They're going to price that in as far as risk. And Claude, I think specifically, not really too much of a threat for software companies. It's a threat for OpenAI. If like with AI right now in large language models, there's two areas of the market for you. Okay. There is enterprise AI and there is consumer AI. Well, OpenAI was the leader in both at one point. Okay. Now Claude's got the enterprise pretty much on lockdown right now. Okay. That could change. We'll see. That would change the valuation prospects for OpenAI. And Gemini's pretty well taking over the consumer applications of AI with Gemini. So, that's a problem, especially when you're burning $5 to $10 billion. And, by burning $5 to $10 billion per month, it's not like you sign a lease for something, sign a project, instantly spend $5 to $10 billion. A lot of these are open commitments, contracts that take a while. If OpenAI were to go bust, 57% of Oracle's remaining purchase obligations or performance obligations are OpenAI. What would that do to Oracle? You're seeing it. You're literally seeing it in real time. Okay? I mean, look at Oracle's chart. We are seeing what this would happen. Now, I'm sure if that news came out, Oracle would fall another 30%, 20, 30%. But once we get the news, it will become more localized, right? Right now, we're just in liquidity crisis mode because somebody is having a lot of issues. Once we get the news, the pain will be concentrated in whoever's feeling the pain, right? Oracle's probably going back to $90 a share, 80, 70, $50 a share, back to 2023, 2022 levels. The low of 2022 was $53 a share. The low before COVID, during the COVID crash, was $36 a share. Okay? You could go back to those levels if OpenAI went bankrupt. Would you have software that continues to sell off? Probably not, but right now it's about shoring up books. Okay? That's what it's about from a Wall Street side. So I don't know when that's going to happen. I don't know if that causes like software multiples to come ripping back to where they were before. Probably not. It probably takes some time, I would guess. But that's one reason I'm bullish on cyber as well. Because again, once we hear about who's having problems, again, I believe it's OpenAI. Is that going to affect software, cyber? It shouldn't in a logical world. Now, markets aren't always logical, but you're pricing in that risk right now. And as markets fall further, you start to price in more economic risk, things like that. Now, I had a crazy thought today, so I want to say it like out there. It's not crazy, honestly. I bet Trump says something about this tomorrow. I bet he puts out a tweet, tries to correct it. Now, if markets don't bounce off of a good old Trump tweet right now, yeah, it's really bad. That's just my thought. Something you said is the reason that tech is selling off. You know, maybe if that's what you believe, like I wouldn't fault you for that. Maybe it's Powell. You know, we really don't know when it comes down to it. I just have I just think it's OpenAI. It has to be, right? There's no way in hell you would give OpenAI the same, kind of valuation. If Claude threatens these software companies this much, it threatens OpenAI more. They're a direct competitor. Guarantee that, right? Logically. TSMC, another buy. It could be. I don't know where the stock is trading at. I didn't look at that. I haven't looked at that one recently. TSM. Ooh, still near the highs. I would personally stay away from it, but it's, who knows? Who knows? Semis have done okay. STCL copper, yeah. So there's a couple of stocks that I have on my list. I looked at this one recently. What is it? I can't think of the ticker. Arrow Copper. Yep, this one. I have this on my watch list. If we do see markets come down a lot, I have Arrow Copper on my watch list. It was the cheapest out of all the ones I was looking at, and they're supposed to be ramping production like a lot this year. And then you obviously have the copper shortage by next year. But again, that copper shortage only happens if chips continue to be in hot demand. If Wall Street bullies, if Wall Street bullies Mag 7 into cutting their capex, maybe 50% in the coming quarters, like that could happen if they get bullied enough. The copper shortage idea kind of goes out the window a little bit. So that's kind of what you guys got to be thinking about. What if the AI narrative went out the window? That's one reason why maybe you could buy a Resolve, because or some of these software names and all of that, because it's different themes within AI. Like even if the semi trade sour, that'd be bad for Nvidia, TSM, it'd be bad for Poet, it'd be bad for all of these other companies. But is it going to be bad for Resolve? Initially, yeah, the Resolve stock's not going to do well. But is AI adoption going to fall or fail at this point? I don't think so. I don't think there's any scenario that AI adoption slows, like materially slows down or stops, right? So that's a big theme. Same is true with cyber, right? Even if data centers start to slow down and there's not as much data centers being built, I think AI applications are still going to be built, right? It's not going away anytime soon. More AI applications, more APIs means more need for cybersecurity. Like no matter which way this thing goes, I think cyber does well. I think the software stocks that use AI really well are also going to do really good. Um, what cyber are you looking at besides Rubrik, Net, CrowdStrike? So I mean, I'll tell you the reason I'm looking at Rubrik besides like the growth metrics and all of that. Like they're the fastest growing cyber company. They're trading at a pretty damn reasonable valuation for that growth relative to, I think it was CrowdStrike that I was looking at that's like 2 or 3 times more expensive than Rubrik. So like CrowdStrike, well, it is like cream of the crop as far as cybersecurity. It's not cheap at all. Like if something were to go wrong, there's a lot of valuation that could theoretically be taken off of that. I think they're all good. It's just the risk reward, right? I think Rubrik has, I mean, probably more downside, but a lot more upside than Crowd, right? Crowd probably wouldn't fall as much, but it's not going to rise as much. And in this environment, when you're getting these kind of deals, I would like to go with quality, but high risk, high reward, right? The stocks that are down, again, Rubrik is down like 52%, what'd we say? Like this thing, once Wall Street realizes like this thing is gold, could do really well on the recovery. Really, really well. Especially if you could buy this thing at like $30, 20 bucks. Psh, easy money in my opinion, right? Easy double, triple by the end of this year, my opinion, at those prices, right? I see the stock at most likely around $100 by the end of this year. It's kind of the way I'm thinking about it. Stock's down 53%. Last I looked at Crowd, it was only down like 20 or Crowd. Yeah, last I looked at Crowd, it wasn't down as much. But like, could you buy this? Of course, right? Like you're buying super quality. I want quality, but I also want to be heavily rewarded when it bounces back. Like, yeah, Crowd is down 33.5%. That's definitely a buy. It takes you back to like early 2025 levels. Like the thing could still come down for sure. Anything can at this point. High quality company. Definitely worthy of some money. Like even if like I wouldn't be opposed to buying some Crowd still, even though I have a lot of Rubrik. Like that could definitely make sense. What about Micron? So I'm really not a fan of the storage companies right now because of how much they've went up. That's it. Like, are they in demand? Are they doing well? Yeah. I was looking at Micron back in 2024 at like, $60-$70 a share. Like Micron used to be the company that was like Snapchat, right? Almost. They would report earnings and the stock or the market just never liked it. Ever. Like the stock could not get right. Like Snapchat had decently good earnings today. That stock cannot get right. Okay. Almost every earnings, the stock falls. For a long time, like back 2022, 2024, 2023, as long as I can really remember, there was always this, okay, Micron's going to fall 7% after earnings. That has shifted as, the bottlenecks, I guess, bottlenecks. I don't know what you'd call them. Like Nvidia's CEO today said that they're not going to make a new 2026 gaming GPU because of the shortage. If and that's what gives them pricing power, right? So supply and demand. If they're producing 1,000 storage components or products a day, and there's 5,000 people that want to buy them, they can charge basically whatever they want within reason, and people are going to pay for them because they want them now. But if companies get bullied into investing less into capex, they're going to spend less on chips. There's not going to be that kind of pricing power, especially when companies do this well. There's always going to be people coming onto the scene, people making their own products, and they're all kind of trying to raise output right now. So that's why semiconductors are really boom and bust, because in good times in the economy, before like AI, when there's more TVs that are needed and more microwaves and more washing machines and more, name the product, it probably has a semiconductor of some kind in it, companies pump out more. So they do really well during good times. And then when people cut back on those things, they do really bad. I only keep mentioning the whole bully thing because I seen it with Meta in 2022. Right? Now, is AI going to be treated like the metaverse? Probably not. Could it? Could that happen? It could. Now, could companies could cut back 50% on capex and still be spending a lot. Now, these stocks, like a Micron, is priced for capex to grow. So like what I say all the time, like to make money on a stock, if markets are expecting 10% earnings growth for a company and the stock does 30%, you're going to make a lot of money on that. Say the multiple was 10, the multiple is going to go up to like 20 or 30 with the growth, with the earnings growth. That's how you make a bag, okay? To put it in layman's terms. Well, if, you get this boom and bust cycle, if things slow down, if you're pricing in, capex to grow 20% next year, all of a sudden it's down 30%, the multiple's going to compress, the stock's going to come down. This is one I would not touch at all, to be honest. Like, could you make money? Of course, but you're really betting on capex budgets not coming down and hyperscalers not getting bullied. I couldn't even tell you how many times today people said, oh my gosh, like these, companies. Let me find the clip. Okay. Do you guys want to watch Dan Ives or no? Let me know if you guys want to watch Dan Ives for a minute. It was like a 5-minute clip where he was asked, what keeps you up at night? And that's what he said about companies getting effectively bullied into capex. But, again, I watched it in 2022 and it was, it was very just in your face, like Wall Street bullying a company means like they drop the multiples, they stop wanting to buy the stock goes down a lot. That's all everyone is talking about. Lately it's been like, our company's going to invest more. The more the company would invest, the better it would do. But, not these days. Okay. Let's see. I thought it was fascinating. Dan. See? Like, look, it says about 80% of Amazon's 2026 capex spending likely AI related. I've seen it everywhere, and CNBC television doesn't put out that many clips anymore. So I've seen it on a lot of other things. Bullish CEO. This is actually one of the stocks that I have on my watch list. Interesting. Dan Ives. I forget where he spoke today. The street. Okay.
Tech is the worst.
I think it's like 4 or 5 minutes in. So take a listen to this. I am going to run to the bathroom real quick, but I will be right back. This is insightful.
Tech is the worst performing sector so far this year. Is this just a pause or a crack in the AI trade? Let's bring in Dan Ives, Managing Director and Senior Equity Research Analyst at Wedbush Securities, to discuss. Dan, always good to have you. I know you're well known for saying the AI party is just...
I want to make sure it's actually recording now. You guys can hear me fine, right? Can you guys hear that fine? I want to make sure you guys can actually hear it. Need to call in a welfare check on Tom Lee and Saylor. Okay.
Getting started, but it feels like the party is getting broken up here. Did someone call the cops? Is the AI trade actually cracking?
Look, I mean, there's some glass in the dance floor right now. Maybe the DJ stopped playing a little music. Look, Carolyn, I think there's a combination of things that are worrying investors. I think one, we've had a tech earnings season that's robust relative to the numbers, but obviously a lot of the sort of ebbs and flows relative to capex and monetization, that's worried investors. I think the NVIDIA OpenAI soap opera has definitely added to some of the agita. And then look, part of it is, I think what's happening here, we're almost having a mini DeepSeek moment, going back to a year ago. A moment where investors feel like, okay, it's cracking, the trade is really starting to, almost blossom into something that's become a storm. I disagree. I think this is actually much more of smoke, no fire, bark worse than a bite relative to just massive monetization and spending that we actually see playing out in front of us.
This doesn't test your bullishness at all, though? It doesn't make you worried at all to see such a negative performance so far this year?
Oh, it does. I mean, look, I had, 2 hours sleep the last 2 nights? I mean, the point is, I'm talking to clients that I haven't talked to probably in 10 years, just given the nervousness. I mean, to just some palpable sort of nervousness out there. But look, I've covered tech going back to late 90s. Clients need me in times like this, not when stocks are going up and to the right. But I just view it like this. If I talk, but I was just gonna say, if I'm tracking 50, 60, 70 deals, and those deals on the enterprise are accelerating, no one's stopping. We've actually seen acceleration in terms of strategically a lot of the AI projects. All of our Asia checks are showing demand and supply calling anywhere between 10 to 12 to 1 for NVIDIA chips. The point is, I get the nervousness, but that's what I focus on, the fundamental checks, rather than just looking at the tape and having that get me nervous.
What is it that keeps you up at night, though? What's something that could derail this rally?
What keeps me up at night is the growing pressure on these companies, from NVIDIA to OpenAI to Oracle to Google to Microsoft, in terms of capex. And the worry that investors are just growing increasingly concerned about what this all means from a capex perspective. The thing that concerns me is, does that in any way slow down the pace of AI spend? I don't believe it does. I think these companies, to some extent, I come out of earnings season more emboldened that this AI revolution's hitting its next stage of growth. But the pressure that's on the companies, I actually think it's causing more transparency. Look at Oracle. They laid out 45 to 50 billion. They showed their plan, how they're going to spend, how they're going to raise money. That's what you want to see.
Well, you mentioned Oracle. Software stocks are really getting hammered on fears that AI will essentially make them obsolete. We're seeing names, not just like Oracle, but ServiceNow, Salesforce, Snowflake, down almost 30% in 2026. Are any of those fears warranted, or do you look at that as a generational buy? I guess, which software names are clear winners and which are most at risk?
Yeah, so to answer, and it's a great question, I'd say, is AI a near-term headwind for software? Yes. Is AI structurally ruin the sector? No. I essentially think, baked into some of these valuations, you have to assume Salesforce loses 10-15% of their customer base. You have to assume ServiceNow numbers go down 20% from where the street is today. What I'm saying is, like, this is an Armageddon like trade right now for software. And I can tell you, going back to the late 90s, I have never seen a sector structurally thrown into the garbage like this in all my time. Now, there have been times, dot-com bubble and burst, financial crisis, but the software sector is basically trading like it's structurally broken. And I strongly disagree with that view. And that's why I think, like, Salesforce, Microsoft, we talk about Oracle, CrowdStrike, some of the cybersecurity names, I think are the ones that you own along with Microsoft.
With you.
Fuck. Damn it. Fuck. Okay. I was saying I like to watch a lot of these clips, not because I necessarily like agree with them. 95% of the time, I do not agree with what these analysts have to say. They follow trends, they follow narratives. They're not great investors, okay? But I like to compare and contrast my thoughts. And when I heard all of the backlash on Google's capex numbers yesterday and Amazon's capex numbers today, I was like, oh shit. Like, they're trying to bully these companies into spending less. And you know what would happen? These Mag 7 would do really well. Nvidia would do terrible. Dog shit. Like, short Nvidia if you think companies are going to cut back on capex. Short the memory stocks. Short copper. There might be more structural problems there, like shortages, but generally, like, short copper, like all of these components of the AI trade would do poorly. Mag 7 would do really well, and software would be like in the middle, right? Because you're still gonna have AI applications, you're still gonna have things going on. That's why, again, I really like cyber right now, because the deal you're getting, and I think a lot of the selling in cyber is ETF related. Like, if ETFs own cyber, if it's like 5% of the fund and they're selling software, cyber gets sold too. But that's the long story short. He does go on to talk about, like, companies he does like. CrowdStrike, okay, Palantir. He really likes Tesla. Microsoft. He says Microsoft would be one of the, like, generational buying opportunities. To 2 years from now, you're gonna look back and wish you bought Microsoft. Generally, I agree with that, but I think there's other ways to kind of play this on a better risk reward basis. So yeah, I do recommend you guys watch financial YouTube, like these clips and all of that, just to compare and contrast your bull thesis, right? That's the only thing it's really good for. Like, if you're thinking, oh wait, this could maybe happen, and then you hear somebody else talk about it, it's like, oh crap, Wall Street's starting to think about that too. That's like, okay, I weigh that a little bit higher on my list of mental priorities to watch. But I often don't agree with Jeremy McBurney. Oh, that's funny. I'm back, right? I'm not muted still. I'm back. Am I back? I'm back, right? I don't know why. Like, this normally should be moving with volume, but sometimes it, like, glitches out. Am I back? Thumbs up. Thumbs up. Thumb down. Thumbs up. Thumb down. We're back, right? Okay, cool. No, but what's your name? J-Dub. Yeah, so the reason that a lot of the time that happens where I'll talk about a stock and it won't, you know, immediately do well, is because I'm not thinking about today. I'm not thinking about the next 1, 2, 3 quarters. I'm thinking about the next 3 to 6 quarters, the next, 3 to 12 quarters. I'm thinking every time I make an investment, I'm thinking, okay, what's Wall Street expecting? What am I expecting? And what do I think is going to happen? Okay. So I could do this for any stock, and any time of the market changes, because if, like, memory stocks right now, right? If I was bullish on memory stocks, I would say, look, like, I'm expecting this to happen. It has happened. I'm like, there's probably not much upside there, right? So when I'm investing in like a Resolve at 3 times price to sales, the only thing valuation tells me is that it's not priced into the stock, like Resolve specifically, or other stocks, okay, like a UiPath, okay, maybe that's a better example. When I'm buying UiPath, it's not because UiPath is killing it today, it's because I think UiPath is going to kill it in the future. So sentiment can go up and down, 1, 2, 3 quarters. Generally, I'll give a stock like 3 quarters before I say I was wrong. Okay, I'm gonna give it a little bit of time to show signs that it's heading in that direction, and preferably you'd want to see signs already. But I'm looking for stocks that are 5 to 10xers. Honestly, I'll take a 2x in this market. But I'm like, you give me stability, you give me long-term growth trends, you give me a management team that isn't diluting, like you give me a bulletproof company from AI, I'll take a double in the next 12 months. That's cool with me. I'll put 50 grand into it, make 50 grand. Like, cool, awesome. But generally, again, I'm not thinking about the short term. I don't like Resolve, dude. I bought the stock at $2. I held it through the 850s. I knew there was the risk that it came down. In my head, I was like, okay, I'm up like 400% on this stock. There's no way I lose money. Hello. I started buying this stock, and once it got to the low fours, and once it got into the threes again, sure as shit, now it's $2.20. But the long-term thesis has not changed. The company has continued to do well. I don't exactly agree with the timing of the dilution, but like, it is what it is. We knew there was going to be dilution. So, that's going to be there. But I'm buying a company for the future. And with my thought, when I buy a stock, is it's going to do a lot better than Wall Street thinks. Like UiPath, I think it's going to do a lot better than Wall Street thinks. Now, with Rubrik, I wouldn't like it at $100, but I like it at 40. I like it in the 50s, because I think, based on sentiment and price action of Rubrik specifically, the stock is probably going to do, if they did 48% growth last quarter, they are forecasting 44% growth in 2026. They just beat all of Q4 on earnings, revenue, EPS, all of that. They didn't share the numbers yet, but they beat across the board, they said. Okay. The stock was pricing in about 40, 44, 40% growth when it was $100 a share, when it was $80, $90 a share. You were pretty well pricing that in. Okay. Like here, when they announced the guidance, the stock went from 65 to 93. That was pricing in the guidance. $48 a share. Even if the company meets the guidance, they don't exceed the guidance, it's not priced into the stock right now. Okay. And that goes for any stock when, things sell off. But I actually want to share this with you. It's like a half a paragraph. What Rubrik said last night. Oh, fuck. Jim Cramer on Rubrik says you're basically getting that quarter, that fantastic quarter for free. Oh my gosh, Jim Cramer, come on now. Where the hell is it? Okay. It was tip ranks. I remember that. Okay. Google kind of sucks. Are you kidding me? Why is Google not pulling this up? How annoying. Don't you hate it? When software doesn't do what software is supposed to do. See if Ortex has it. Yeah. See, nobody gives a fuck about any of this right now. Okay, hold on. Let me do this. I just want to read this because, dude, I was like, there's no way. But long story short, again, that is why I tend to be early to things, okay? Like, god dang, you gotta pull frick. Oh my gosh. Okay. Look, so whatever, they internally like boosted somebody up from a different position. This Jesse Green guy put him as chief revenue officer. It says currently valued at 10.44 billion, continues to demonstrate impressive revenue growth of nearly 49% over the last 12 months. It says Brian McCarthy, who is leaving for another opportunity with nearly 25 years of go-to-market leadership experience, including almost 3 years at Rubrik. Green has previously held positions at Mongo, App Dynamics, and BMC Software. It says under Jesse's leadership, the team has realized exceptional growth. It says here, the company also reported that its preliminary fourth quarter financial results exceeded all guided metrics, following what it described as a record third quarter. Specific financial figures were not disclosed in the announcement, according to Investing Pro Data. Rubrik maintains impressive gross margins of 79%. So they said, look, we beat on all metrics, but they haven't reported numbers yet. Like, Wall Street doesn't care. None of anything good is being priced into anything right now. SPY recovering a bit. That's nice. But again, I'm not buying Rubrik for the next week. I'm buying it for, give it a little bit of time here, right? So if you like bought Resolve, I haven't even been invested in Resolve that long. And I could have took like a 400% profit, didn't, hindsight's 2020. But there, I'm not going into any of these stocks with like a short-term mentality, Yeah, Jim Cramer did talk negatively about Resolve, and he wasn't wrong for what he said. He said that Resolve just continues to dilute, and since he talked about that, I believe they've diluted twice. So like, Jim Cramer's wrong on a lot of things. He wasn't wrong when he said that about Resolve. I will give him his flowers on that one. Like, he was spot on. Now, do I think he's spot on about like the business being shady and all that? Everything he said, no. Specifically on the dilution part, he was right on that. Maybe he knew dilution was coming. Who knows? Yeah, Resolve only down 4.6% today. Definitely looks impressive. I think some of it has to do with the market cap, right? It's just a dirt cheap stock at this point. Like, it's washed out. The sellers are gone. Like, who's selling the stock now? if you didn't sell it already, like why would you sell it now? Right? I know, Jim Cramer, no. uh, yeah. Yeah, no, I think Rubrik though could be a 50 to 100 billion dollar company, 5-10x from here over the next 3 to 5 years is kind of my thoughts around it. Um, that's my mental framework for the company. I have more specific, numbers. I think they're going to grow like 47 to 49% revenue growth this year. I think it's actually going to accelerate a little bit more, even though it's already accelerated. And again, the stock, like based on the price, you can tell what's priced in. Okay. Like Micron, I could tell you right now the numbers are priced in and you have to smash the numbers. Like Micron, there is no room for disappointment. Okay. Same is true with SanDisk. Investors were rewarded in these stocks because Wall Street was not expecting the kind of growth that they've seen. It's really pricing power because of the shortage. But again, you have to kill the numbers. And even SanDisk did kill the numbers and the stock still sold off. It was volatile. Like initially after earnings, it rallied. And then the next day it sold off and went red. So a lot of volatility there. And then it was down like 16%. It was down a little bit today. Tax season. Yeah, tax season's coming. What's your Lyft thoughts? Lyft is a really good buyout candidate. That's always been my thought on Lyft. It's a really good buyout candidate. I mean, it's not doing like terrible compared to its $7 low, but at these prices, like it makes sense for like Tesla to buy them or something like that, right? Just to gain the customers, or Waymo or Tesla should buy Lyft. I believe the market cap was only a couple billion. Like, I think that would make sense. And Micron will crash. If talk of like capex budgets, like if companies get bullied into lowering capex budgets, simple supply and demand would say that the stock would crash, because now the stock is priced for incredible growth to continue. If capex budgets do begin to come, under scrutiny and maybe companies make announcements, yeah, that would be one of the areas that would be hardest hit for sure. Think outside the box. Yeah. I definitely try to. Like another company that I really like, that I have a significant position in. You guys might not like this one, but again, it's risk reward. It's what's priced in and what's not priced in is Sweetgreen. Okay. I know it's fucking stupid. It's not like the highest quality company by any means, right? But, it's kind of like Chipotle, follows the same kind of trends. CMG, is that Chipotle's ticker? Yeah, CMG. Chipotle has definitely done a lot better. Sweetgreen, though, is the fastest growing restaurant by locations. The problem with Sweetgreen is internally, like, same store sales comps were down like 15%, and they changed their loyalty program, and that hurt them, a lot more and all of that. But if we do have a stronger economy, if this whole panic does not bleed into like the real economy, people will start paying $10-15 for some of these bowls again, right? Like, I don't think that's going away. I don't think the whole shift towards being healthier not goes away. Like, everyone wants to be a little healthier, especially if it tastes good. Like, there's this place here in Michigan that they do like shawarmas, like Mediterranean food. It's kind of a pain because they don't have a drive-through. I would rather just go through a drive-through and get the food. Like, you gotta park and go get it, and it's in a busy traffic location. So location-wise, it's not very convenient for me, but I'll still go out the way to get it, and it's not cheap. This is Michigan. We're talking about like $15 sub. Like you get a $7 foot long from Subway. Like, but it is healthier, just tastes way better. Like, man, that's one of my favorite places. I actually haven't had them in a while. Might have to, try it out again. Try something else out on the menu. But I normally just get the chicken with the yellow rice. Throw some white rice in there too. I get the garlic and the hummus, a lot of that. I put chipotle in there, and then I get like lettuce, tomatoes. I like tomatoes. The pico, some of the white cheese. I like those purple things. It's I was gonna say rubric, rhubarb maybe, like rhubarb things. Put some of those in there, and then they got something else that's like sugared, it's like almonds, almost something like that. Do it up, right? But not cheap. Okay. Sweet Green, I think risk reward wise is priced for disaster, right? The stock in 2023 in March was a $6 stock. And again, they are opening the most restaurants out of anyone else out there. I think they're targeting like 1,000 total restaurants by 2030. I think they're at like 400 today, 500 today. Yeah, it's not the greatest balance sheet. Yeah, there's issues. But again, it's risk reward, what's priced in and what's not priced in. And I think Sweet Green, if they can get their internal operations more efficient and better, there could be upside here. But this is not something I'm buying expecting it to go to $40 anytime soon. I'm buying a $5 stock and saying, look, the stock could 8 to 9x to get back to highs that they seen in, November of 2024. It might take 2-3 years for the stock to hit 20, right? But again, that's a 4x. A little bit of money goes a long way in some of these stocks. I know, Sweet Green sponsor win. Yeah, purple it might be purple cabbage. No, it's pickled cabbage that I really like. It's like the yellow cabbage, but it's like a rhubarb. It's like not spongy, but like not super hard. I don't know what it's called, but Nebius. Yeah. So AG1 should be sponsoring creative. Yeah, for sure. It's funny. I get probably 5 to 10 sponsorship requests a day, but unless I use the product, there's no way I'm gonna talk about it. I think that's like salesy. Like there's a lot of like crappy promotions that people try to get you to do, but there's some good ones, but it's like I don't use it. I'm not gonna pretend that I use it to make a couple $1,000. Like that's just not genuine. But if Royal Caribbean wants to sponsor me, definitely make a video a 60-minute clip telling you how to take a cruise. If what else do I like? I don't know. Water? If Water wanted to sponsor me, maybe. I don't know. Something else. I could probably find some Cheerios. I like some Honey Nut Cheerios. But yeah, get a lot of sponsorship requests, so just don't do it. But Public, oh yeah. If you guys are not, this is a perfect plug right here. If you guys are not signed up with Public, it is by far the best brokerage that I've ever used. Like Robinhood, if you like Robinhood or Webull, you're gonna love Public. Okay, love it. It's not the greatest for like option trading. To be fair, I've never really traded too many options on there. I've bought like leaps and stuff, but like if you're investing, trading like shares wise, man, what a platform. There is a link in any of the videos posted where you can get $100 if you sign up and deposit $1,000 in your choice of free stock, Tesla, whatever it is. It's free. It's free money. I mean, read the disclaimers. Obviously, not a financial advisor, but it is what a great brokerage. So that is, I guess, a sponsorship if you want to say that. But Nebius, yeah, back to what I was gonna say. Somebody got me sidetracked. The Don. I think that was the Don. Yeah, sidetracked. You know, I just get out. You know, my mind goes crazy with thoughts. But Nebius, yeah, I honestly I haven't looked at it in a little while. I just assume it's down. Yeah. So last I knew, they were projecting between 1.5 and 1.75 billion in revenue, like ARR. So what are we at now? Oh, damn. Okay. Yeah. What? Okay. Yeah. Okay. Some of their contracts. Yeah. These numbers have changed a lot since I bought the stock, or when I bought the stock. Management expects an ARR of 7 billion to 9 billion by the end of 2026. Again, it's just one of those things where I've seen Meta get bullied so hard into totally pivoting how they were spending money back in 2022. If the sell-off continues and Wall Street wants to paint that narrative, it is a risk. So it's really a high risk, high reward kind of thing at this point. How much is the reward? You know, that's where you could probably look back to like December 2025. Wall Street kind of like the stock in the 90s and the hundreds. I think there was a lot of buyers around there. So that's like the upside near term, I would think, right? If markets bounce, you go back to 70, 75, 80, $90. You know, it's not bad, but $95 would be like 29% upside. But the downside is if companies pull back on capex, this thing could fall back to probably like $40, maybe 35. Trade in this range would be the idea. If you fell to 40, your downside's 45%. That's the risk. 29% upside near term. Like long term, if you're buying this for like a long-term investment, I think you'll do fine. I don't think AI is going away anytime soon. Eventually, multiples on these kind of stocks will fall when the growth slows down. Clearly, what we're seeing with capex, that's not the plan right now. The plan is for growth to continue. So based on the information that we know right now, Nebius would be a great buy. But if it changes, and it could change with one headline from any of the hyperscalers, that's the risk. Okay, if the narrative changes, if the expectations change, there's about 40-50% downside from here and about 30% near-term upside. Longer term, companies, like a $20 billion company, you could easily see the thing probably get to like 100 billion market cap. There's a path to that, I would say. Like a good 5x could be in the cards, but that just means that you can't have any disruption to that AI trade right now, because numbers wise, the stock's priced for like $90, $100 a share based on where capex is right now. That's what I would say. But if the stock comes back to like between 25 and 45, then it's an easier buy because there's more of that bad news baked into the stock, right? It's always like what's priced in, what's not priced in. What do you think is going to happen versus what Wall Street thinks is going to happen? That doesn't look good on Nebius. Has more downside. Yeah, Dan Ives likes Nebius. Yeah. Yeah, I like Nebius too. I made a couple videos, um, like uh back here like 2024, late 2024, and was buying the stock in the 20s, like 22, but sold it long, in like the 40s, 30s, 40s, because it just happened quickly. Capex budgets got raised, the AI story got stronger. Probably should have bought it back in like the 20s here, but you know, maybe I was looking at something else at that time, and then so price always has a meaning, and I want to tell you guys that too. Like if you ever forget or don't know if a stock is like a good buy or not, price always has a meaning. So if a stock is dead like Sweetgreen, you don't have to know anything about the company, what they do. You don't even have to know what business they're in. Like, you could look at this chart and I could tell you nobody expects anything good out of this company, or very little. Does that mean that the company's going to do good? No, right? That's where you have to dig into it a little bit more. You don't just want to buy every stock that's, destroyed, right? And you have to understand buying stocks, like bottom fishing stocks, is riskier than buying a stock that's in an uptrend or in an up cycle, in an up industry. But price always has a meaning. So Micron telling you the expectations are high. The company has done very well, right? Nebius is somewhere in the middle. Expectations aren't super low. They're not super high. There's room to surprise if numbers come in really good, or room for, numbers to come down if they're really bad. Like the major index, there are no unresolved gaps on a weekly chart. The gap is around 560-ish in the SPY, the same gap from the Liberation Day run up. It's on every major index. Let me see if I can see what you're looking at. You said a weekly? Weekly. I think I see what you're saying. But yeah, I mean, don't be surprised if tomorrow does bounce as shorts cover, right? Especially with a sell-off that was this aggressive in risk. Tomorrow's probably going to be a green day. Okay. Why? Because if you're a fund manager and you just hit a sick short on, ServiceNow, right? And ServiceNow is down, RSI, the most oversold it's ever been. IGV in general, tech software ETF, most oversold it's ever been. And you got a 12% drop in ServiceNow this week, and you got a 12% drop last week in ServiceNow. The week before that, it was up about 4.5%, but week before that, it was down 10.2. Week before that, it was down 4. Week before that was down 4. Down 1 the last week, down 10 the week before that. You probably hit a nice short on ServiceNow or on software in general. IGV's been down for like 10 days in a row. It hasn't had a green day, and bro, it's ridiculous. Damn near would have starved to death before this thing had another green day, right? Overnight looks pretty good, right? Friday, you tend to get a bit of a reversal to some of the trends that you get. If you rally hard throughout a week, Friday's probably going to be a little bit weaker, or you might have the red day on Friday. If you sell off aggressively, like pure emotion, Friday's probably going to be a green day, because Wall Street, if you're short on a stock, the odds are greater that something gets resolved over the weekend, and you could maybe have a better week the following week, right? So it's a last chance to really take profits. don't be surprised if you do see some shorts covering or people going out to buy some of these stocks. Oh, you can't see the chart? Oh, yeah. Maybe. I don't think I can really move it right now, but yeah, that's I will be mindful of that. That's my apologies. $100 billion market cap late 2027 sometime. Yeah, and Nebius is like when I was investing in the stock and following it very closely, they were in the process of like coming more to like American markets and having a presence there. But Europe, right? They're a European-based company, right? Am I not getting this wrong? I know they have. I believe it's Finland, right? Yeah, Finland, Iceland, France, right? So they're kind of over there as well. And there's not a lot of like data center like people or companies that are in Europe. Like Europe is not like a tech centric kind of a place. A lot of that has to do with regulation and just taxation, I would say. But you could serve that market. But yeah, they New Jersey. Yeah, see, that's a new development. I didn't know that. New Jersey data center in the former Kansas City Star building. Yeah, okay. So, yeah, definitely. What is their market cap? Yeah, there's a guy in the trading community. His name's Nono. He made a lot of money on Nebius. Like a lot of money on Nebius. And I believe last I knew he still liked the stock, but yeah, 18.6 billion. So yeah, for sure. I was roughly in the ballpark. For sure. Could $100 billion company? Well, no. Is that you? Do you still like Nebius? But yeah, generally right now, I I just think you want to weigh like what's priced into a stock, what's not. You want to be more selective. Like you don't want to be buying the stocks that are still near the high right now because if something does get worse, they will come down. If the narrative shifts specifically around capex and budgets at companies, like that's not great. Even if capex like doesn't fall 30% or 50%, what if Google just came out and said, look, instead of doing what was it, 175 billion in capex, we're going to do 150 billion. If that's AI related or not, maybe they're taking away capex from something else. It's not AI related. Like it would still be taken as, oh crap, capex is slowing down. And it's about the trajectory, like next year in 2028 and what capex is going to look like for those years versus what's happening today. So if capex were to slow down, it would be the memory stocks, copper names, maybe some basic materials alongside copper. I'm not an expert in exactly what is in semiconductors. That could be a good way to hedge maybe in a copper play. Might look into that in case that were to happen. But yeah, memory, semis, especially NVIDIA would get smoked in that scenario. Even if it had nothing to do with AI, like capex. If they just cut capex budgets to like make shareholders happy, quote unquote, then it'd be bad. So I really kind of want to stay away from those areas besides like the poets that I already own. Specifically within software, you want to look at companies that really can't be disrupted, or not as much, like ServiceNow. Although there could be some disruption, I think the largest issue with ServiceNow is specifically the pricing model, the price per seat. If companies are going to have less employees, they're going to not need as many employees to have ServiceNow software, but all these software companies are going to change their business models in the next, quarter or two to consumption based, right? Because that's just coming. What was the company I was going to pull up? I forgot what company I was going to pull up. No is into USAR right now. Yeah, USAR is solid for what it is, like onshoring critical minerals. That's not going away. Like that's, again, you kind of got to look at what's priced in, what's not priced in. You got to think about it like that. There's definitely some good news priced into USAR right now, or any of them. Copper, literally name the commodity, there's good news priced into them. But it's really about headlines, about which companies are actually going to bring supplies to markets in the next year or two. USAR is one of those that I don't believe they're bringing any product to the market like in the next year or two, but when they do, it's going to be a lot. Like they have a lot of like reserves and deposits of some of the rare earths. So it's one of those, how is sentiment? It's more of a sentiment trade than anything else. But yeah, tensions with China. That's what this is. And precious metals, tensions with China. Besides silver, like who freaking knows what's going on there? So let's look at the indexes real quick before we wrap this bugger up. And yeah, see, like this is something that could like disrupt CVS. White House launches direct to consumer drug site Trump RX. Here's what to know. Is CVX down on that? CVS down 1.5%. That's not crazy, but what is it in overnight trading? I'm just curious, honestly. Down 2% in overnight trading. It was down 2.5%. Actually, not a drop like you'd think. But NASDAQ futures down 0.42%. S&P's down 0.22%. Dow is down 0.13%. Again, as we talked about throughout this, the downside momentum has been crazy. Okay. Just, you've never seen anything like this. A sector just get thrown to the dumpster this quickly. You're going to get a bounce. The weekly RSI is at 25. The daily RSI is at 14.84. You're going to get a bounce at some point. These companies are not going to zero, right? The question I have is which ones recover the most and the fastest, because you obviously don't want to invest in a company that has to take 5 or 10 years to prove itself that it's going to be around, like Adobe. Adobe's going to be around. They're going to be just fine, I'm sure. Is Wall Street certain on that? No. Who knows when they will be? So you really want to avoid those companies that have the gray line. Okay? Don't invest, just my opinion, don't invest in those companies that may or may not get disrupted with AI. If you can't say for certain, here's the reason why this company will not be disrupted by AI and their software, then I would stay away from it. But specifically in cyber names, I think that is one of the easiest trades right now. Like, how asinine is that? Bitcoin, cryptos could be an interesting area as well. As liquidity comes back, you would expect Bitcoin and other cryptos to also do well. They don't have much of the tie to AI, but there's weird speculation again that quantum could like hack the Bitcoin what's it called, like ledger, and like hack people's Bitcoin. Ethereum doesn't have that problem because it refreshes and creates new like passcodes, if you will, every so often, 2 times a year. So some of that might be weighing on Bitcoin. It might continue to weigh on Bitcoin. I don't buy the whole quantum thing though until something actually happens. But again, you do want to shop for something here, in my opinion, but you do want to be very selective because software in general is not going to V-shape. I don't expect the IGV to V-shape after the initial bounce, which probably takes you back to like 90 on IGV. Maybe, 95. Maybe. That might be a stretch. But you could have a 5% bounce in like an IGV, and you might have CrowdStrike report earnings, and it's good, and they say, look, AI only helps us. And if the market sentiment flips, you could see CrowdStrike at a new all-time high pretty soon, right? Or Rubrik or any of these other companies. So that's kind of the way that I'm looking at which companies I'm buying right now. And again, UiPath I think is gold. Some people don't. I do. My opinion. I think Sweetgreen, really good risk reward if you're looking for something totally outside of tech. I like what was it? Keurig Dr. Pepper if you're looking for something out of tech, and I like APA Corporation if you're looking for something out of tech. Again, for tech, ServiceNow, UiPath, Rubrik, Zeta. These are companies that I have been buying recently. There's others as well, but again, you want a company that can't be disrupted by AI. You want a company like Zeta with trillions of proprietary data points on people, on demographics, on countries, on cities, on, age groups of people. AI agents cannot replicate that. Like, it's just not possible for AI agents to replicate that. Probably ever. That is something that is very specific to Zeta. Again, they've had 15 beat and raise consecutive quarters. We're getting very close to profitability. I could give you the spiel on all of these companies. Zeta was one that's maybe like, it's MarTech. Like, why would they not be affected by AI? That kind of clarifies it a little bit. But the fact that you're live tells me we're still in a state of emergency. I just like this, like I was going to get off and play the game a little bit. But I just like this. I just like markets. Dude, I'm a nerd. I play nerdy games. I read nerdy books. Like this book here. Y'all would probably like this one. Only the Rich Can Play by David Wessel. It's about politics and investing, how they're interconnected, how lobbying works. Yeah, I got it from Ollie's too, dude. Fire. $4.99. Yep. I was like, yep, I'm gonna get that. The detective work, the planning. I love your content. Thank you. But yeah, definitely do some more lives though. Make sure you guys have your notification bell on, because when and wherever there is a crisis, we will try our best to cover it. And when times are good too, also want to be able to do some lives and celebrate the good and the bad with you. But especially these bad times, how exciting. Volatility creates opportunity no matter how bad it sounds. This is why I was saying, well, not specifically why I was saying, like 3 weeks ago, do you guys remember that? When I was called like the dooms guy? Like everyone was roasting me in the comments, okay, of those videos. I'm like, look, this is not a market you want to be in margin. Did any of you guys watch any of those videos? Like no shame if you didn't like deleverage then, but I'm just curious. Anyone here watch any of those videos? Because like I was wrong, but right at the same time. Like I was right in the timing and the like, you don't want to be in margin here. Like it's getting a little dangerous, but I wasn't expecting a full-blown liquidity crisis. I was expecting maybe the Supreme Court ruling would come in bad. I was expecting, something like that, right? So I was wrong there. But hopefully maybe some of you guys like, you know, heard it. It was not popular 3 weeks ago to be not even bearish. Like I wasn't even bearish. I was just like risk reward. Like I'm always looking at things on a risk reward basis. Every stock, the markets in general, like my portfolio, like if the risk reward just doesn't make sense, like if it's not even 1-to-1, like I don't care about it. Like I mean, like if it's 1-to-1, right? And a $50 stock, you think, or $75 stock, if you think that has an equal chance to drop from 50 to 25, or from 75 to 50, or to go up $25, right? Equal chance either direction, and there's nothing like potentially a problem with that, that's okay. Maybe I can get behind that. But like with some of these memory stocks or some of the other ones, when I'm like, look, the upside downside, they're pretty comparable, maybe 20% upside, maybe 20% more downside, but there's XYZ that could come out of this. It's like those I would really want to stay away from. But I did not expect the IGV, the freaking IGV, software tech ETF, to fall 32.5%. That's beyond me. You literally said it's not useful when a YouTuber tells you are in a crash, and you are in a crash. I'm telling you about the crash before it happens. Yeah, that's literally what I said. You definitely watched that video for sure. There's no sense in that. Like I hate when people are like analysts and commentators, market commentators specifically. Like I know software sucks. Like why are you like, tell me a good stock, tell me your thesis of why it sucks. Like, don't just tell me it sucks, or you're crashing. Oh my gosh, we're crashing. Tell me why we're crashing, when it's going to recover, when it's going to get better, things like that. I just hate when people do that. Like specifically like people that have influence at all, small or large, that tell you to sell during a crash. Like market's going to be down 10%, sell everything. It's going to fall to 20. Like I'm never going to say to sell anything during a crash. I don't believe in selling a stock unless like management makes bad choices. The general trend changes. Like I'm not going to sell a stock unless something like that happens. But emotions can be crazy. And I definitely fall victim to that sometimes. Sometimes some days are frustrating. Today was frustrating, right? Because it's like, what is going on? Like, I know I'm not the only one that thinks this is like some kind of liquidity event. Somebody's going BK out there. This is not the software trade. Somebody's getting blown up and leveraged somewhere. It's like, time will tell, I guess. But yeah, weirdest market ever, dude. So weird. I've never been in a market where I can say like I can count on a stock when it's up, if it's up 10-20% after earnings, like Roblox and Reddit and what was the other one? Elf's another stock that I actually like, but there's still some downside there. Again, these stocks can go up 10-20% on earnings, any of them, until the volatility chills out, and then still fall 7% the next day. Like, did we not just hear that, revenue was XYZ, 30-40% better than expectations? I guess not. Like Elf had they beat on EPS by like 50%, something crazy. They showed like 37.7% revenue growth year over year. Now, I know like how the comps work the next couple of quarters. It's going to be easy to show that year over year growth, right? Same is true with UiPath. UiPath, like same thing there. Their comps are going to get a little bit easier. That's going to help the growth rate. But like Wall Street just doesn't care about any of this. Like they could give a shit less about what a company is doing fundamentally right now. Now, if you're doing bad though, you're gonna fall 30%. But if you're doing good, you're gonna fall 7. only the rich can play book. Yeah, did you read that? You read it? I only read a little bit of it, so I haven't read that much. I'm reading. It's like a square blue book. It's really weird. It's like this big. It's called The Secret to Success. Wait, let me see if I can pull it up. Oh, if you guys have not, let me give you guys the best financial book to read, no matter where you are. No matter if you got $1 million invested, no matter if you got $10 invested, no matter if you know you're a bear, you're a bull, doesn't matter. The Psychology of Money. Oh, this book right here is a must read. Huh? Okay, now I got so many tabs up, it's not even showing me the tab open. Okay, time to close some tabs, guys. But yeah, this book here, dude. I don't know if you guys can see that too well, but The Psychology of Money, incredible book. Like, did you know that you know, Charlie Munger, rest in peace, and Warren Buffett, right? They were partners for 30, 40 years. Okay. There was actually a third partner with them, but he used leverage and blew himself up like in the 60s. Would have been worth hundreds of billions of dollars if he didn't do that. So, yeah, dude, tab overload. Yeah, all right. I could probably do like an all-nighter and just shoot the crap with you guys all night, but if that's the case, I'm definitely not like AFK when the market's open. AFK for the first like 4 hours. So go ahead and wrap this up. Thank you guys for joining. You know, hit the like button on your way out. Appreciate it all. Appreciate the super chat. The Don, appreciate that a lot. If you guys want to sign up for Public, they give you $100 if you sign up. Use the link in any of the video descriptions, not the live description right now, but the video descriptions. Sign up, deposit $1,000. They will give you $100 in this market. Like 100 can turn to 200 pretty quickly if you're buying the right stocks. So figure out throw that out there. If you guys want to come trade and invest alongside us, we had some names in here. Talon. I didn't put it out in the Discord. It's been so long since I went live. I didn't put it out in the Discord, so I don't know how many trading community members are in here, but I know Talon. Talon's my dog. They all are, honestly. We make money together, we lose money together, guys. So yeah, that's it. You guys have a great rest of your night. Hopefully tomorrow's a better day. We'll see. And I will see you